Hello again, everybody. It's Harry Boxer, the technical trader. It's Wednesday, August the 11th, and these are the charts of the day. Today I'm going to cover some of the ultra short ETFs that we've been trading recently over the last few weeks and so. The market itself had a distinctively and decisively negative session that cracked the back of the 5-week uptrend and took out a couple layers of support. The technicals were so negative today, it was, to me, overwhelmingly convincing that we're probably headed lower here. So as a result, we want to take a look at some of the ultra shorts and what they're doing and go from there. Starting out with the BGZ Direxion Large Cap Triple Bear. You can see that well, first of all, if stepping back, you'll see that a big downtrend ensued. The stock went through reverse splits. And then with the May drop, popped, pulled back when they rallied, and then had three rallies in this zone, taking it up towards 18 and a half. In June, they rallied to an even higher level in the 19 and a half zone, and then proceeded to fall into a 5-week declining or falling wedge with the indices moving in a rising wedge. You can see the price breakaway gap today that occurred here, took it back above the 10 and 21-day moving averages. All that stands in its way at this point is some resistance around 15 and a quarter, at which it's trading in the after hours. And then following that, we should see a run that takes us up towards 16 and 3/4 thereabout. That's my initial target. Secondary target up at the early July highs up around 19 plus. The EDZ, the Emerging Markets Triple Bear, which had been in a terrible decline, also rallied in April and May, came down in June. Now, the June rally was not as strong as the BGZ. Emerging markets didn't do as poorly, but then it went into a very neat declining orderly channel with a 1, 2, 3, 4, 5-wave decline based out over the last several days, and then today gapped up, created the heaviest volume in several weeks, and closed up 329 or 9.5%. Immediate goal would be to test and take out the 38 and a half area, which may be done tomorrow. We're at that level in aftermarket. The declining tops lines around 40, the declining 50-day moving average around 42. So let's call 42 my initial trading target if we do get the breakout. The secondary target will be up around the 50-51 zone. So we'll call that our targets. The EDZ, the ERY, which is a new one that I followed, the Direxion Energy Triple Bear. I wanted to point that out to you because it had a significant breakout as well. As you can see, it had been basing out for the last several months, swinging wildly between 40 and 70. And then it had been in a neat orderly 5-wave decline, retesting the June lows before basing out over the last several days and turning around abruptly today, up nearly $4 or 8.5%. There's overhead resistance around 53.80, 54, where the lateral price resistance and declining 50-day moving average come in, but secondary target up around 59. So we'll set our targets at 54 and 59 going forward, with an outside possibility if the market really gets ugly, this can spike up into the high 60s, maybe even 70. FAZ, the financial triple bear, similarly rallied on 3 or 4 occasions in April, May, and June, but kept pulling back when the market pressed higher. 1, 2, 3, 4, 5-wave decline ensued, and today broke out $1.38 or 10% on 60,500,000 shares. Closing right at its moving average, trading above it in after hours. I'm looking for a move that takes us to 16.5 pretty quickly, and then potentially something up towards 19. Those are our trading targets going forward. The SPXU, the Pro Shares Ultra Short S&P 500. Also in a falling wedge, broke out today with a 8.3% jump up to 46 on 7.3 million. Broke above the gapped up above the 10 and broke above the 21. There is a minor target around 33 and a quarter. We expect maybe reach tomorrow. The secondary target up around 35 and 3/4, and a more intermediate target up around 40.41. The TZA, one of our favorite trading vehicles, today popped out of its declining channel and broke up 377 or nearly 12% on 21.6 million shares. It closed above the 10, 21, and 50-day moving averages all in one session, and with a target up around 41 and a quarter or half range, followed by one up around 45, 5.5. Those are our targets on the TZA going forward. Note that surge and on-balance volume to a new high for the year, to me, is significant. And lastly is the VXX, the VIX short-term futures volatility ETF. You'll see that this falling wedge was broken today as well. Not as big a thrust, up about 7% on up $1.53, but enough to say that I think we've broken the trend. The volume is picking up a little bit here, and we could see a move that takes us up to test the 25, 5.5 zone. That's my next trading target. Beyond that, I'm looking at 28, possibly even as high as 32, 33 if we get a real ugly market to the downside. That's it for today. Be careful out there.